All right, let's dive in. We're going to break down a really fascinating theory that's making the rounds. It connects the Fed, the stock market, and, yeah, potential new all-time high for Bitcoin. We're going to connect all those dots.
So here's the big question, right? Could a fresh flood of cash from the Fed light a fire under small-cap stocks and send Bitcoin to new highs? It's like a chain reaction, and we're going to look at every single link, starting right at the source, the money itself.
Okay, so our first clue starts with the U.S. monetary system. You know, after those massive cash injections post-COVID, you might remember the term quantitative easing. Well, the system's looking a little fragile. The Fed has tried to pull some of that cash back out, but even just a little bit has made the markets pretty tense.
So everyone in the market is basically on the edge of their seat, just waiting for the Fed to turn that money spigot back on. Now, they'll probably call it something else to avoid the political drama of QE, but let's be real, it's the same idea. But the real secret, the thing everyone is watching for, isn't if they'll do it, it's how much. That's the number that could change everything.
And analysts have drawn a really clear line in the sand here. There's a magic number. See, if the Fed injects less than $30 billion a month, well, that's just kind of like topping up the oil in the engine. It keeps things running smoothly, but it's not going to win you any races. But if they announce more than that, whoa, that's the signal everyone's waiting for. That's seen as a powerful market-moving stimulus.
So burn this number into your brain, $30 billion a month. That is the threshold. If Fed Chair Powell gets up there and announces anything higher, traders are going to see that as a massive green light for what they call risk assets. You know, stocks, gold, and, you guessed it, Bitcoin.
Okay, but what if the Fed doesn't want to inject that much cash? Well, here's where it gets interesting. Their hand might be forced by a different part of the market entirely, the bond market. And our second big clue comes from the 10-year bond yield. Just think of this thing as the master pressure gauge for the entire financial system.
Ever since late 2023, this yield has basically just been moving sideways, kind of treading water. But it's not resting, it's more like a coiled spring, just accumulating energy, getting tighter and tighter. And the huge question on everyone's mind is, which way is it going to pop? Because if it breaks to the upside, oh man, the whole game changes.
And here's the corner the Fed is backed into. If inflation starts to tick up and pushes those bond yields way higher, it suddenly becomes way more expensive for the U.S. government to pay its bills. I mean, we're talking about a serious problem. To stop a full-blown crisis, the Fed would have no choice but to step in and start buying up those bonds. And what does that mean? It means opening the floodgates and pumping a massive amount of cash into the system. We could be talking way more than that $30 billion number.
Okay, so we've established the how, a big potential cash injection. But the next question is, where does all that money go? Well, for our third piece of the puzzle, let's turn our attention to the stock market, and specifically the Russell 2000 index. This is the one that tracks all the smaller U.S. companies, and right now, it is sitting at a really fascinating spot.
Get this, the index is right there, knocking on the door of a new all-time high. But here's the crazy part. Almost everyone is betting against it. The sentiment out there is just overwhelmingly bearish. You have tons of investors who are positioned for this thing to fall off a cliff, not break out. It creates this super tense situation, another coiled spring just waiting to snap.
The analysis we're looking at uses this great phrase. It says, the market is loaded with short positions. That's just a fancy way of saying a ton of people are betting that prices are about to go down. And this extreme negativity, well, that's actually the key to what could happen next.
To really get why this is so explosive, we gotta quickly talk about something called a short squeeze. Okay, imagine you bet $100 that your friend's favorite team is gonna lose. But then they start winning. To cut your losses, you might try to bet on them to win, right? It's kind of like that. Short sellers bet the market will fall. If it starts to rise instead, they start losing money, fast. To stop the bleeding, they are forced to buy. But all that forced buying just pushes the price even higher, which then forces more short sellers to buy, and you get this crazy upward spiral.
So, let's paint the picture. The Russell 2000 just ticks 1 point above its all-time high. Suddenly, the first group of short sellers panics. They're forced to buy to close out their losing bets. That little bit of buying pushes the price higher, which then triggers the next group of short sellers to buy. You see where this is going? It's a domino effect, a massive cascade of forced buying that's like pouring rocket fuel on an already lit fire.
All right, so the Fed, bond yields, a short squeeze in small cap stocks. What on earth does any of this have to do with Bitcoin? Let's finally connect all the dots and put that last crucial piece of the puzzle in place.
The connection really comes down to history and, just market psychology. When you see a big breakout in the Russell 2000, it's a signal that investors are feeling confident. They're in a risk-on mood. They're looking for growth. And historically, when that mood takes over, all that positive sentiment and all that cash tends to spill over into other things, especially high-growth assets. And what's at the top of that list? Bitcoin.
So this basically brings the whole theory together. You can think of it as a four-step recipe for a huge rally. Step 1. The Fed turns on the money printer. That's your fuel. Step 2. That fuel pushes the Russell 2000 past its all-time high. Step 3. The short squeeze acts as the spark, igniting that fuel into a massive rally. And Step 4. The grand finale. All that momentum and all that cash spills over into Bitcoin, kicking off its next major leg up.
So if this whole domino effect actually plays out, here are the numbers analysts are watching for Bitcoin. Think of 87,500 as the floor, the key support level. But the real battleground, the main event, is going to be around $94,000. That's probably where a big wall of sellers is waiting. If the bulls can smash through that wall, though, well, the path might just be clear for a run at that massive psychological target, $100,000.
And that really brings us to the big takeaway here. The theory is, well, it's pretty compelling, isn't it? All the pieces seem to be lining up, and there's even some history to back it up. It's like a perfectly written script for a massive market move. But we all know the market has a mind of its own. It's the ultimate director, and it absolutely loves to go off script.